Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, February 13th at about 3 p.m. Eastern. Well, traders and investors are going to be on guard next week for further volatility induced by fears of artificial intelligence disruption, as we also assess the durability of a rotation beneath, I should say, the market surface, along with upcoming earnings from Walmart and fresh economic data. The good news on our side is 4 sectors are up at least 10% in 2026. They are energy, consumer staples, materials, and industrials, and small cap stocks have also posted outsized increases. So on that note, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY, right down here, if you can see, was trading at $684.38. Now, that's still below its all-time highs set earlier this week and a couple of weeks ago. And that all-time high is at 697. That's what we're trying to get over here and can't seem to do it. The SPY is sitting below the red line, the 20-day moving average, which is coming in at 689 and change. The 50-day moving average, the green line, which is coming in at 687 and change. And the 200-day, of course, is down below at 648 and change. Now, we know that, you can't see it on this chart, but we know that since its April low, everybody had an April low on April 7th, since the April low at 481, the SPY has been walking up, making higher lows and higher highs all the way up on that 20-day. For the most part, it's been trading over the 20-day moving average, actually since April, which is really good. And it's climbed in an uptrend, making higher lows and higher highs until it hit this October high right there at 690. That was the all-time high for the market right there at 690. And that was a 44% gain from the April lows up here to this all-time high at 690, 44%, really incredible. Now, after the October high, this long-time rally started showing signs of fatigue like this. Now, we can see one slip earlier here. That was a bigger slip than had happened earlier on this uptrend. So it did dip down here before the October low. It did dip down to its 50-day moving average and down to 653. Then it rallied up to its all-time high. Then it fell back down again, speaking of fatigue, falling to 652 right here in November. Then it gained energy, pushed up here, starting in December to 689. Then rolled over a little bit again for a day below its 50 and 20-day moving average, but got energy, got buyers. Buyers are what take it up. That's all that does take it up is buyers. Buyers came back in and back up here to 689, excuse me. Then it started just moving up that 20-day again, but falling back down, gapping down, moving back and down to the 50-day, back up again, and it got up here to, finally got up here to 697, and that made that high there, then it pulled back down below the 20 and 50-day, down here, then rallied back up, and now we're at 684.38. Now we're trapped in this range here, it seems like between 675 and 697. That's what it looks like. Unable, at least at the moment, to climb over that 697 level. So we can draw these lows here, and we've got this here. So now we're moving in a sideways. We're no longer in an uptrend at the moment. We're moving sideways. So we will have to see. The one thing, if you sit back in your chair, and I do this from time to time, sit back in your chair, instead of getting so close to the screen, I sit back and look, and if I can see wide red candles, then I make note of it, because that means price opens higher than it closes. So look at some of these red candles here. There's actually more of them, it seems, than there used to be. And if they're wide, that means the bulls and bears are duking it out. So I'm just taking this as a little note of precaution here, wondering if the bulls will continue to hold this market up in the next week. So we have resistance here. Again, in the short term, resistance for the SPY is at 687 and 689, and then up to that 697. We have the lows here as support, potential support, 676, 671. Down here, let's see, what was this one? November lows at 652. And then if we look down, we can see that the 200-day is coming in here at 648. I think I said last week, I hope we don't need that, but I don't know. Maybe we will. At any rate, so we got all this going on. Now, next week, we're still in earnings season. Plus, we have housing starts and building permits, new home sales, and the PCE inflation gauge, plus the fourth quarter GDP, gross domestic product. So it's going to be interesting. So hang on. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows the NASDAQ 100, which has in it the top 100 non-financial stocks in the NASDAQ stock market, including large cap momentum stocks like Alphabet, Meta, Alphabet, that whole group. Oh, I said Alphabet twice, didn't I? Excuse me. When I captured this chart today, the Qs were trading at $603.33 after dipping to a retest. See this low down here? We had a retest of the October highs 3 weeks ago, and from there the Qs dropped down to these lows and unfortunately held up today. So the highs are up here at 637. Excuse me, the Qs are now trading below the 20-day moving average, the red line, which is coming in at 616. The 50-day, the green line's coming in at 618, but we're still trading above the 200-day moving average, which is coming in at 581 and change. Now, we can't see it on this screen, but we know that since the Qs made the April low for it at 402, we know the Qs rallied from there like the SPY, and for the most part walked up its 20-day moving average, dipping below it a few times, but for the most part walking up it and rallying up then to the all-time high in October up here. The all-time high was at 637. So from those lows at 402 up to the highs that we are now, the Qs made a 58% gain on that, which is incredible. It was absolutely incredible. So from the highs at 637 up here, the Qs dove down to 581 in November. Rallied to back up to 628 in December, then fell down here to 600. See right down here, fell down there to 600, turned around and rallied and popped back up, and then started walking sideways along its 20 and 50-day moving averages right here. But as you can see, can't get back up to that high at 637. So it's been going sideways, and we've been drawing trend lines the whole time like that. And we drew that last week. And then, because I said when the triangle closes, or maybe before, price is going to break up or break down. Well, it broke up for a few days and then broke down. So lots of excitement, So we're back down to where we are now at $603 and change. So the trend line, those trend lines have been broken. Now we have to look down here to see what's going to happen next week. So we're down here below the 20 and 50 days. We do have overhead resistance at those two lines, potential resistance at 616 and 618. And then, of course, on up to 628, which has been kind of a pivot point, up to 637. We have potential support down here at where they rested made the last two pivots here. And actually today, the low is 597, so we're closing a little higher than that. So we've got this support here at 594, then potential support at 581, that low, and then of course, and the 200-day moving average comes in at 581 as well. So I always say I didn't think we'd need it, but we're getting a little closer than we were to that. So we definitely have another exciting week ahead. Please do check in with your protective stops. And it's going to be a short week. Monday is President's Day and the market won't be open. So it'll be short, but probably very exciting. Our final chart today is a daily chart of the ARK, the ARK Space and Innovation ETF, symbol ARKX. I'm just going to call it the ARK with you just to make it easy. The ARK has 32 holdings. Some of the top holdings include Rocket Lab, L3 Harris Technology, Kratos Defense, Teradyne, and Deere, and AMD. Now, when I captured this chart today, the ARK was trading at right here at $31.49, below its 20-day moving average, the red line, which is coming in here at $32.60, just overhead. The 50-day is down here at 31.17, and of course we can see the 200-day down here at 27. And we can see that in August, look back here, and this is becoming, the space industry especially, is becoming much more of a thing that's being looked at. I personally think it's very exciting. And so I'm really keeping an eye on the ARK because I like this. If we look back here in August, we can see that price was just pretty much consolidating, moving sideways, pretty much here in a zone of 24 to 27, moving sideways. It's just not getting, with AI and all the other things going on with that, the space innovation, which will be definitely, I'm sure, impacted by AI anyway, was not gaining a lot of attention. So back in August, it's just going sideways, consolidating in that 24 to 27 zone. Then it gradually, a lot of stocks went up in October. So it went up, came up, and it made this high and rallied up to the high at about 32, then fell, then went sideways, consolidated over the 20-day, got a little overbought here. As you can see, the red line, the RSI was overbought. Then it fell back down to retest, almost retest those August lows, and back down to 25, then rallied, fell down, and then started rallying here, crossed up and over its 20 and 50-day moving average again, and right there we had the 20-day cross over the 50-day, and price took off really fast. This is an all-time high right here at almost 36. Right here is an all-time high for the ARK. Then fell in down from there down to its low, all the way down here to 29, rallied back up over the 50-day, and then rallied back up off that 50-day and clung, I'm going to say, held on for dear life to that 50-day moving average today, so we can see where it closed right there at $31.49. So again, I'm staying interested in this particular ETF and the stocks in it, and looking at the stocks in it, some of the top 5 that I told you about. So if in the coming week, if the market behaves reasonably well, now the ARK does not follow the market exactly. It doesn't. But at any rate, we want the market behaving somewhat. So in the coming week, if the ARC can stay above its 50-day moving average, and it's coming in, we'll just call it 31 here. If the ARC can stay above its 50-day at 31, I will buy a small position of the ARC in my trading portfolio. I'm going to put my stop down here at 28.75. If and when the ARC can rise above 30, I'm only going to, if it can come up and rise up above 33 here and close above it, then I will probably add to my position. And of course, at that time, my stop will be a trailing stop. So you may want to keep an eye on the ARC, the ARKX, in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, this is a great time to check out my timeless training programs. Trade the Trend to Profits shows you how to take bigger profits out of the market over and over again. You'll learn how to buy a stock or ETF in the early stages of an uptrend, how to manage it as long as the trend is in place, and at the right time, grab your profits. And you'll be buying low and selling high and doing it over and over again. And actually, that's what everybody wants to do, don't we all? You'll know when to buy, how to manage your position, and the right time to take profits. Now, our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading, to how to swing trade successfully, how to trade the trend to profits, which is what we're talking about today, one of my absolute favorites, because you don't have to sit and watch it every minute by any means if you're trading a daily trend. And you take home more money actually by not jumping in and out so much. You can do that most of the time. We also have here how to read charts, great for novices, 3 winning setups, great for short-term traders, and how to bottom fish like a pro, another one of my favorites. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you'll have unlimited access. You can learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.